Does opening your account sometimes feel a bit like opening a horror novel? You're waiting for the jump scare. You're not alone. Many founders that I've worked with find finance anxiety inducing, and they succumb to the temptation to just ignore it until their accountant sends over an update. But the problem is that then they're always looking back to the past rather than planning for the future. And the first step to getting more confident with your numbers is understanding what all the different terms on your P&L or profit and loss report mean, and how each of them seems to have multiple names that mean pretty much the same thing in most cases. So if you've ever nodded along, pretending that you understand while someone goes through the numbers, I've got you. Let's see if we can make it all a bit clearer. What we're about to go through is based on the way we talk about this stuff in the UK for a limited company. Some companies may be different, so always ask your accountant if you're not sure. Okay, let's get started. Top of the page is revenue, also known as turnover, sales, or the top line. It's everything that you've invoiced, all the money that you've brought in. And it's usually a bit of a vanity metric because in most businesses, there's also going to be some costs involved in delivering the work. You don't just get to keep all the money that you bill. And that gives us our next most important line, our direct costs, aka cost of goods sold or COGS. This is all the money that you spent directly related to doing the work. So raw materials, freelance support, stock that you bought to sell on, packaging, and so on. Anything that you wouldn't have spent if you weren't delivering that work sits under direct costs. And that brings us to the next important line, gross profit. That's what's left of our revenue after we've subtracted the direct costs of doing the work. So if your gross profit is low, you're busy, but you aren't actually making much money yet. You're just generating income just to hand it on to your suppliers. Next up is admin costs, also known as overheads or fixed costs. Think of these as all the bills that you'd be paying whether you delivered one project this month or 10 projects. The things that you have to pay for regardless, like office rent, software subscriptions, phone bills, electricity, insurance, and so on. That leads us to operating profit. And operating profit is our gross profit minus our admin costs. So we're working our way down the list from revenue minus direct costs gives us gross profit, minus admin costs gives us operating profit. And it's what's left after we delivered the work and covered our running costs. And then one of the most important lines comes straight after operating profit, net profit, usually also known as the bottom line. Net profit is your operating profit minus any interest, taxes, and other costs that are going to be due on it. Net profit margin, which is the percentage of your revenue that's net profit, is one of the best indicators of the health of your business. It's what's left to reinvest or grow. It's a number that you should be monitoring over time to see if it's going up or down. And seeing it rise is often an indicator that you're not just doing more work, but you're doing it more effectively too. But here's the bit that trips everyone up. There's another line lurking at the bottom of the report, distributable income. Just because your net profit says £50,000, for example, it doesn't mean you can pop to the bank and withdraw £50,000 in dividends. If you're a limited company, even if that money is sitting in the account, it's not your money, it's the company's. And you've got to account for any corporation tax that's due and any losses or profits from previous years to know what's actually left that's yours to take as a dividend. And that's your distributable income. If you pocket more than your distributable income allows for, that's actually illegal under the Companies Act. So it's best to be sure and talk to your accountant. But what's the best way to get more confident with the numbers day to day? Look at them more often. Don't just wait for your accountant. Systems like FreeAgent or Xero mean that these numbers update every time you hit send on an invoice or log an expense, so you can see how things are going live and course correct as needed. If you've been avoiding the numbers, or if you want to get your systems talking to each other so you can lead your business instead of following it, head to the link in my bio. Let's have a chat. I'd be happy to help.